Today is Monday, March 28th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, ADMIS Vice President of Grain Research, and Alan Bush, ADM Investor Services Senior Financial Economist. Steve, let's start with the grain markets this morning. The grains continue to be volatile. Why?
I think there's three reasons. Number one, the volume is down quite a bit because of all of the volatility. And so right now, when you look at managed funds, long position in the grains, it's record high as a percentage of total open interest. We also see where futures are quite a bit higher than the 50-day moving average, which the funds tend to look at as far as if they should be long or short. And then finally, the algorithm machines, 90% of our trade and the day-to-day type basis, they just trade headlines. And the headlines change every day as far as this war in Ukraine is concerned.
There's a USDA report this week, Steve. Will it have an impact on prices?
They always do. I mean, the guesses as far as acres and stocks is pretty tight. There isn't a big range in numbers, but they should say the corn acres down from last year, while bean and wheat acres should be up. The stocks report, basically looking at more beans and corn and less wheat stocks. But this report always has interesting numbers coming out. It gives us our first indication of farmers planning. But on March 1, I don't think the farmers had any clue as to what they were going to plant. I mean, they're getting near record high prices for new crop corn and soybeans. So I think a lot will change in acres once the farmers get in the fields.
Steve, one final question here. Where's the money at? Please give our viewers the latest numbers on the fund positions in grains, and also if you could cover the key technicals, I'd appreciate it.
Well, for right now, they have close to a record long corn position. They have a record long soybean meal position. Their wheat position flip-flops, 20,000 contract, either short or long, depending upon what's going on in Ukraine. And they're building a position in soybean oil. The global vegetable oil prices are up because of lack of sun oil exports out of Ukraine, and also watching pretty closely the demand by China with their economy slowing. So technically speaking, we are in the corn market a very tight trading range since the early March. Soybeans keep backing off from high positions, and wheat has this huge trading range. So it's really difficult for people to buy rallies and sell sell-offs. But I think April 1st, we'll start trading weather. We'll start trading maybe less competition from South America as far as corn and soybean exports are concerned, more demand out of the United States. And I think if our weather guy is correct, we'll start trading a little bit more of an uptrend than this choppy trade right now.
Thanks, Steve. Turning to the financial markets, Alan, there are some economic reports due to be released this week. Which reports will the market be focused on?
Well, first of all, we have the March Consumer Confidence Index guessed at 107. That'll be on Tuesday. Then we'll have the revised fourth quarter GDP on Wednesday, guessed at up 7.1%. But I think in the first quarter, we'll see numbers substantially less. And then on Friday, we'll have the Institute for Supply Management Manufacturing Index guessed at 58.6. So those are the dominant economic reports that it will probably have the most market moving tendencies.
Alan, currency markets are moving slightly. How important are central bank policies when trading the currency markets?
Well, first of all, in the absence of major geopolitical events, of course, which we're subject to right now, it's the interest rate differential expectations that dominate, in fact, very strongly dominate. And right now, the dollar index is being supported by prospects of tighter credit from the Fed, as much as a 50 basis point hike in rates at the next meeting, while the Japanese yen is being undermined by the Bank of Japan, which is remaining very accommodative. In fact, even today, they said they are going to be buying their 10-year bonds to keep rates low. So as you can see, the dollar index advancing above a symmetrical triangle with good gains today, and the yen falling to almost a 7-year low. So it's the interest rates from central banks that dominate overall, and that would suggest the dollar will continue to advance, and the Japanese yen will probably continue to decline.
Finally, Alan, one more question. Will the central banks on a weaker global economy, will they focus on a weaker global economy rather than the fight against inflation? And if yes, when do you think that would happen?
Well, first of all, almost all of the central banks, of course, not the Bank of Japan, but most major central banks are on a course of tightening to address the very severe inflation problems that we have around the world. Of course, we had the U.S. inflation at 40-year highs, and inflation overall very much a problem. So central banks this year will continue to raise rates, remain hawkish in an attempt to curtail the inflation issues. But I think by mid or late 2023, the Fed will be faced with another problem, and that is likely to be a slowing global economy. So that may be the tipping point when central banks stop raising rates and start looking at maybe halting the hawkish policy. So this year, continue to trade the interest rate futures markets from the short side, as most central banks will be very hawkish.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests, should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.